What's good, YouTube? It's your boy, Charles Enoch. We got a new Investor Myself episode, so let's just get started. Okay, so today's episode, I'll be going over what debt weapons are banking products I specifically use for velocity banking. Now, velocity banking is a lifestyle for me. So when I'm doing my finances, I'm specifically trying to find the best banking products to maximize my specific velocity banking strategy. Now, these products are credit lines, such as credit cards, personal lines of credit, HELOCs, etc. I will also go over the banking institutions I use for these specific products. So basically, you guys are about to see what specifically is in my wallet. Also, I'm always looking for better debt weapons or banking products. So if you guys do velocity banking, comment down below what type of credit cards you use, what type of lines of credit or HELOCs you use, and the institutions that you use them from, and why you specifically choose that institution. So before we get started, if you have not done so yet, go ahead, smash and destroy the like button for me. Make that thing turn blue. Also, if you're new to the channel, go ahead, take a little time, hit that subscribe button for me. It helps me reach a higher audience base, and I really do appreciate it. So first, I want to go over the main credit cards that I specifically use. Now, the reason why we use credit cards, specifically rewards cards, is to not only capitalize on the rewards, but to also push the time back that you have to pay your expenses by 30 days so you can keep your actual cash and invest it. For example, I'm always using my HELOCs to invest into other real estate. So interest on those HELOCs, they accrue daily. So if I was able to stuff all my income onto the HELOC by using my credit card to pay all the expenses and leaving it onto the HELOC for 30 additional days, it's gonna save me a lot of interest before I have to actually use my money to pay for those expenses. Okay, so the main card I use is the Citi Double Cash Back card. This card gives me 2% cash back on all purchases, no matter what the category. This card is also a MasterCard, meaning that I can use the site Plastic to pay my mortgage. So I have this card pay all my utilities, insurances, and the mortgage on my primary house that I live in. So roughly the total expenses per month is around $3,000. So 2% of that $3,000 would be $60 cash back that I get per month. Now remember, I'm just getting $60 just for using the card to pay pretty much the utilities, insurances, and my primary mortgage. That's a pretty good deal. Now for those that follow me, all my rentals are paid off in full by me using my HELOCs, pretty much the BRRRR strategy. And for the rental checks that I get for each property, I put specifically into the HELOC. So pretty much I can't pay my HELOC using a credit card. So for those that are wondering, how come your expenses are so low and you say that you have all these properties? So these are just the expenses that I'm putting on my credit card. All right, so second card I use is the Wells Fargo Propel card. So this card offers 3 times the points on eating, gas, travel, and streaming services such as Hulu and Netflix. This card also offers cell phone insurance, travel insurance, and rental car insurance. Now it does have other benefits, but these are the specific benefits that I use on this particular card. So I specifically use this card to pay for gas, groceries, my phone bill, streaming services, plane tickets, and rental cars. Now these expenses usually add up to about $400 per month. Now if we use 3 times the points, that would give us 1,200 points, which would be equivalent to about $12 cash back. Now the benefit with paying my cell phone bill specifically with the Wells Fargo card is because it offers that cell phone insurance. Now the cell phone insurance offers up to $600 cell phone protection if it breaks, cracks, get lost, etc. Now I know some of y'all are like, Charles, man, I got the new iPhone. The new iPhone is way more than $600. It's like $1,200. That's not enough cell phone protection for me. And you're very well right. But for me specifically, that's enough protection for my cell phone. I never really had the newest cell phone. So if $600 can protect my phone that's a little outdated, hey, that's fine with me. So since I'm getting free cell phone protection from my Wells Fargo card, this allows me to drop the cell phone protection my cell phone provider is offering me. And I think cell phone protection for my specific provider is like $15 a month. So I pretty much save $15 a month by not having that cell phone protection, since Wells Fargo is going to give it to me for free. Now, when I use this card to pay for my plane tickets, if my luggage was ever damaged, lost, or stolen, I would have insurance on my damaged, stolen, or lost luggage. Last, when I pay for rental cars using this card, if I ever get in an accident, they're providing me free rental car insurance. So even though this card specifically only gives me about $12 cash back, if I combined it with the $15 that I don't have to pay for cell phone protection from my provider, it's close to $30. So if you see the idea, I'm getting a lot of passive income just pretty much by using my cards in specifically different areas. So the last main card I use is the Discover It card. Now, I don't have the Discover It card with me right now, so I can't show you. But this card has a specific feature that not a lot of cards have. And this feature is called Cash Over. Now, Cash Over is when you're able to buy a product from a store, let's say like Walmart, and you're able to get cash over the price of whatever the product is. This is also commonly known as cash back. Now, the key thing is this is not with your debit card. This is with a credit card that you're getting cash back, and there are no cash advance fees. So when I need to pay for something with cash, I go to my local grocery store, I'll buy like a piece of gum, and then I'll get cash back from my credit card. Now, this cash back goes to the balance on your credit card, which you have 30 days to pay back. This allows me to keep the money that I'm getting for the current month, all my income, and shove it into the HELOC to reduce the interest at least for 30 days before I have to pay it off. All right, so we'll talk about lines of credit. So I do get asked questions, hey, where do you get your personal line of credit from? So I have multiple personal lines of credit, but I'll tell you the main line of credit that I use in the institution that I really like. Now, my main personal line of credit is from BECU. The interesting thing about this personal line of credit in this institution is they allow me to have the choice to pay down the principal of the line of credit until the due date where I have to pay the interest. Now, this is beneficial because a lot of personal lines of credit, when you put that chunk payment into the personal line of credit, they're going to go and pay the interest off already. Now, this is a particularly good benefit to have because a lot of personal lines of credit, when you put that chunk payment into the personal line of credit, they're going to take the interest off top. You don't have a choice to personally put your $5,000 and put it all towards the principal. Now, in the grand scheme of things, this isn't that big of a deal because you're paying simple interest. And at the end of the 30 days, I do have to pay whatever the interest is. It does just help me pay the personal line of credit off just a tad bit quicker. All right. So last product we're going to talk about is the HELOC, the home equity line of credit. Now, a lot of people do ask me, where do I get my home equity lines of credit specifically on my rental properties? So pretty much what bank do I use to get all these HELOCs for rental properties? Because not a lot of banks do offer HELOCs on rental properties. So the bank that I use to acquire all my HELOCs on my rental properties is called Bank of the West. Now, this bank doesn't offer HELOCs on rental properties in every area. So you're going to have to pretty much do your research, or call them up and ask and say, hey, are you doing HELOCs on rental properties in this specific area? So remember, my rental properties are located in the Midwest, specifically in Kansas and Missouri. So the cool thing about this bank is they tend to have special offers when you're applying for the HELOC. Like when you instantly transfer all your money out of your HELOC, you get a 2.5% interest rate for 6 months or something along that nature, whatever the offer is at that time. So what I specifically do for offers that make me draw out of my HELOC when I'm really not ready, I'll draw out all the money off of my HELOC. I'll wait about a day or two, and then I'll put the money back into the HELOC until I'm ready to buy another rental property. Now, at least with Bank of the West, this trick does lock you into that 2.5% interest rate for the 6 months, because technically I drew it all out, waited a couple days, and I just put it back in. So I just paid a little bit of interest. All right, now that you have taken a look at my main velocity banking weapons and products that I use, I hope this helps you create a velocity banking system that helps you maximize your investment strategy, whether that be paying off debt or investing into assets. Again, if this was helpful, remember to smash that like button for me. And if you're new to the channel, go ahead, take a little time, hit that subscribe button for me. It does help a brother out. So I hope you guys have a good, safe weekend. Peace out.